Hello, 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 and welcome. Happy Thursday to all of you. Always looking forward to these community events. I hope your week has been great so far. Welcome to another community event on this beautiful Thursday. I hope you and yours are doing great, and I'm really looking forward to this session today. It will be a good one, as the title gave it away, the tried and tested blueprint to a sustainable ecosystem. So once more, welcome, community. Welcome all of you that were able to make it or are able to make it today. Very looking forward to today's session again, once more with all of you. These sessions always give us the opportunity for us to discuss about our industry that we are so enthusiastic about, discuss the challenges, the opportunities, and then always zoom back in and look at how we apply added value to our ecosystem and how our ecosystem works. These sessions are always very, very informational, so we don't want to waste a lot of time. Let's get right into it. Let's start, as always, by appreciating you, welcoming you, acknowledging your presence, seeing who is here. And then after that, we'll get right to the point of today's session, and then we'll come full circle back and check with you again whether you have any feedbacks, any points that you want us to clarify. And then, of course, today is day 66. Unbelievable. 66 days behind us. We're about to close down on day 24. So this is amazing. It's an amazing accomplishment. It's a great commitment that we put ourselves in over 2 months ago. It's just amazing to see all this. So it's very encouraging. So I want to also take the opportunity and thank all of you, commend all of you for your efforts, your commitment, your consistency. It's just unbelievable. With that said, let me come to you, community. Let me check, acknowledge you who are here, and let's get this session going. My great brother Theo, as always, is here. Greetings. My great brother Steve, great dearest mother Wino, and the entire BULLRUN family. I pray that you and yours are fantastic. It's always such a blessing being here with you all. Let's go. The pleasure and honor is ours. Greetings back to you as well, great brother Theo. Always a pleasure having you in the community. Always a pleasure seeing you and having you with us. We have my great brother Demo as well. Hello, family. I'm ready for today's session. This is where we can come together and grow as a community. Thanks, Steve, for sharing your knowledge. Thank you very much as well for always being consistent, always opening the VCs and making yourself available for the community. And thank you just as much also for your knowledge, that you're sharing with the community. It's very much appreciated. We have Queen Val here as well. Hello, BULLRUN family. Hello, Mr. Steve. And greetings to our Queen Mother. Greetings back to you as well, Queen Val. Happy Thursday to us all. Thank you, Mr. Steve, for always preparing these informational sessions for us all. We really appreciate the efforts you put in to ensure we get the best info. Thank you for your kind words. Very, very kind. Also, thank you as well for all your efforts you put in, for your consistency, for your commitment to the community, for your leadership, for all that you do to make also play a major part in making the day 66 happen. So thank you all as well. I see for those that are new in the space, join our community. I see there are already website and the Telegram group link is here as well. So feel free to join. If you're new and if you're a new member, if you're new to the ecosystem, feel free to join or do your research based on our websites. Here is the one for BULLRUN. We have the one for Survivor and also the Telegram with it, and then the Killer Whale as well. Thank you very much, Queen Val, for setting these links up on the website. Very much appreciated. I see my great brother Thembi, of course, as well. Greetings all, ready for another spectacular session. Let's go. Always a pleasure having you, brother. My great brother Thembi. It's a pleasure having you around. Thank you also for your tireless efforts, for your leadership, for also being on the VCs and educating the community with your knowledge. It's very inspiring. Keep up the excellent work as well. And also thank you for the beautiful banners that you also contribute in making, producing. So you're all very much appreciated. We have Queen Martha here as well. Good evening, BULLRUN family. Let's go. Good evening back to you as well. I hope you and yours are great. Always a pleasure seeing you in the community. Nice having you with us today. We have Queen Grace here as well. Hello, Mr. Steve. Hello, Mama Wino. Looking forward to another great session to be educated, informed, and inspired. We can't thank you enough for what you do to us. Thank you. It's a pleasure, Queen Grace. I see you also very consistent in the community. You are very much appreciated for your leadership, for your consistency, for your efforts you put in. They don't go unnoticed. It's always a pleasure seeing you around. Thank you for all your efforts as well. We have Queen Margaret here as well. Always a pleasure seeing you around, Queen Margaret. It's a pleasure. Greetings to you as well. Greetings, community. And greetings to Mama and Queen Awino and my brother Steve. Greetings back to you as well. Always a pleasure having you in the community. It's an honor for us to have you here. Thank you also for your efforts, your consistency, your leadership. Very much appreciated. None other than my brother Glenn is here as well. Good day, brother Steve and BULLRUN family and community. A pleasure having you here as well, my brother. I hope you and yours are well. Thank you also for your leadership and for sharing your knowledge with the community. It's always very much appreciated. None other than my brother Crypto Riser. Hello, family. I'm excited for another great live stream with our great brother and leader, Steve. The pleasure is mine. The pleasure is ours. Thank you as well for all your contributions for making day 66 a success with all your beautiful banners that you put out there that are very creative. So thank you as well for all your contributions, your tireless efforts, your inputs, and your consistency. It doesn't go unnoticed. None other than the Queen Mother herself. Greetings, family. Hope you all had a great week. Looking forward to this session. Thanks, Steve, for another exciting Thursday live stream. The pleasure is ours. Thank you as well for all the efforts you put in. Thank you for your leadership, your guidance, your commitment, your consistency. You're very much appreciated, Queen Mother. We have my brother Abdullah here as well. Warm greetings to you all. Greetings back to you as well. Always a pleasure having you around and seeing you around, my brother Abdullah. Thank you for your commitment, your consistency as well. Queen Nancy is here as well. Hello, Steve. Hello, BRL family. Looking forward to another great YouTube live. Thank you for taking your time to educate us. We appreciate your hard work and dedication. The pleasure is ours. Thank you so much for your consistency, your commitment. Thank you for always being here for your with your positive energy, your leadership as well. And it's always a pleasure having you around. My great brother Theo has the chart under control. He says we should hit the like button. And that's very important to bring as much as exposure as possible, because as we know, this is how the YouTube algorithm works. These algorithms play a major role. The more engagement we have on these videos, on these live streams, the further it goes out to reach people. We have Queen Cozy here as well. Greetings, family. Trusting everyone is well. Looking forward to yet another inspirational and informative session. Such a pleasure having you, Queen Cozy. Thank you for your commitment, your efforts, your consistency, and your leadership is very much appreciated. Nice having you here with us today as well. We have Queen Patricia here as well. Good evening, family. Greetings to you, Steve. Thank you again for your dedication. We thank you as well for your dedication, for your commitment, for your consistency as well. You are very, very much appreciated. It's an honor and a pleasure having you all here today. Now that you are acknowledged, recognized, and we are very grateful that you made it today, let's get to today's session. Happy to have you all here today. There's a lot to cover today, so let's get right into it. If you can bear with me, let me share my screen. so that we can kickstart this. So as always, we have to start with the market. We always have to have that bird's eye view and to just have an overall outlook. I know this is the chart that we always look at. We look what's happening with the markets. So I'm not going to spend a lot of time here. Once more, today's topic is the blueprint to success, which is a tried and tested blueprint to a sustainable ecosystem. The takeaway of today is to just understand what the blueprint really is. And oftentimes we don't have to reinvent the wheels. We can literally observe, we can literally just take away what works. And usually what we have to do is just make it more sustainable, make it more scalable, and especially just make it more efficient. So those are the aspects that we added to an existing concept that already has been proven, tried and tested, that it works. And we just spiced it up by making it more efficient, more sustainable, and more scalable. With that said, community, the market today, we're up 7.7%. This comes also from yesterday's FOMC meeting that came out. And we're going to look at that closer. Actually, let's look at it right now. So the market is green because yesterday, of course, this meeting took place, and the Federal Reserve, Jerome Powell, had a good speech yesterday. Apparently, the market reacted very, very positive to it, and we are on track of still. They still see that we can have at least 3 interest rates cuts this year. So despite the inflation rate still being up and the jobs, the employment numbers, or the employment rates rather, still being relatively high. I mean, still being low, meaning that there's enough employment for everyone still. So we're in a very tricky situation. However, the good news and the takeaway of yesterday is that we are on track of still having 3 interest rates cuts. And this is vital. This is vital to really get the bull run going, because as we learn now, it is liquidity that will trigger the bull run, and it's the same liquidity that actually can trigger the bear market if there's lack thereof. And I actually kept this for last, but since we're talking about it, let me just briefly show you where we are right now as far as liquidity, so that we have a better understanding. There is no bull run without the interest rate cuts and without the liquidity really being flooded into the markets. What are we looking at here? The one in pink right now is now currently 2024. This just shows you the level of liquidity that is in. We are very, very low as far as liquidity. The green one shows you last bull run. You see how we are still far away from the solid and steady liquidity that increased, and how we established that liquidity during a bull run. So you see how it, when liquidity really gets flushed into the market, you see how it picks up tremendously. So we are nowhere near it yet. So liquidity is still nowhere near. There'll be 3 interest rate cuts this year still. So we are still looking forward to an amazing rush as far as liquidity, and we'll be well prepared for that. We'll use this chart for more details, more discussions later on, but for now, I just want to ensure you that there's no liquidity yet. The liquidity in the markets won't come until the cuts really start. They need to be interest rate cuts, because this will be the trigger for the liquidity to be flooded into the market. And until then, there won't be a full-blown bull run as we know it, and that will be really efficient and will be seen by all of us. And that's when really all rising tide will rise all boats, and that's where we'll be headed to. So with that said, basically that's it. That's why the market, you see the market is doing great. We're still looking forward to the real catalyst, even though We are 28 days away from the Bitcoin halving, but let's be honest, this is already priced in. This is the fourth cycle. We already know the schedule. It's anticipated. Everybody knows what's happening after the halving. But this time, so many things are going differently. So that's the takeaway as far as the market. Now, the story of the day, of course, is that the SEC has been looking under the hood of companies, crypto companies in Ethereum investigation. And this might also diminish the hopes of Ethereum ETF come May. So I'm not going to spend a lot of time on this one either, because there's two options here. Let's look at the two options. But before we go to the options, let's get more clarity about this, like what really happened. So the Ethereum Foundation, which is based in Switzerland, it's a non-profit organization, and it's actually the heart of the ecosystem, the Ethereum ecosystem. It's facing questions from an unnamed state authority. Obviously, by now we know it is the SEC itself. So this was like developing news, and it came out. It turned out it is actually the SEC, the Security and Exchange Commission, the U.S. Security and Exchange Commission. So what this is they want an inquiry, and they want some documents, and they want to just have a better understanding. And this comes at a time when Ethereum, of course, is doing all these different changes. They just changed from a proof of work, which is the same consensus like Bitcoin, to a proof of stake. So, and a lot of changes are happening. So this is coming as a surprise all of a sudden. And we'll get into more details as the options why this is happening at this particular time. So anyway, so many other American companies that are seeking to invest in the ETFs, Ethereum ETFs now, have been cooled off a little bit due to this. And the way this came out, it was actually a coincidence, because prior to, actually on the 26th of February, that's when it happened. Usually Ethereum Foundation wrote that they received a voluntary inquiry from an authority, which is the SEC by now, that include a requirement for confidentiality. So usually what happens is that the Ethereum Foundation, usually on their website, they usually have a disclosure. And this disclosure usually says that the Ethereum Foundation has never been contacted by any agency anywhere in the world in a way which requires that contact not to be disclosed. So the foundation will publicly disclose any sort of inquiry from government agencies that falls outside of the scope of regular business operations. So basically, this disclosure always was like a proud statement that Ethereum Foundation has never been approached by a regulatory body, especially in this case, the SEC, the U.S. Security and Exchange Commission. They've been after exchanges, after stable coins, after everybody. But so far, they have not approached Ethereum. So this is a big deal. And it's been really hitting the news. It's the most talked about topic right now in the industry, because Ethereum obviously plays a major role in the industry. And the way this happened is because they removed that disclosure on February 26th. So basically almost a month ago. And it was just by coincidentally found out that, oh, that disclosure is gone. So without them actually saying something, obviously this is what's happening now. The foundation has not responded to anything yet, because it's all in confidentiality, of course, right now. But that's the big deal right now. That's the big deal right now that is going on. And what we want to also highlight here is that the effect of it. How can this affect? How will this affect Ethereum? Okay. And there are two options here. There are two options. You remember how when Bitcoin was also in the process of applying for ETFs, and how a lot of fear, uncertainty, and doubt was spread in the news, how they were talking about how China banned Bitcoin and Bitcoin mining, and also how Elon Musk sold all his Bitcoin, and you can't purchase Teslas with Bitcoins anymore. There was just so many news and bad news and just FUD going around to cause the price to just drop, so that these individuals, these institutions can get in at a low price. Currently, as we see, Ethereum is really at more closer to all-time high, sitting at 3,400 right now. So it only serves those who are late to the party for the price to drop before they join, before they get in. So that's normal. That's really normal. What people usually do is they really try their best to put a lot of FUD into the market so that the price dumps and they have a better entry position to get in. That's the one option. There's a second option, and we'll discuss that second option as we are moving on in today's session. So just keep that in mind. It's just FUD because there's another cryptocurrency known as XRP, and they are actually already won the case against the SEC. They were also considered a security, and they were delisted from Binance and Coinbase, and they won after all, and they're not considered by the court. They're not considered a security. So if they are not, I'm not a legal expert, I'm not Gary Gensler. So that's something that not even he can decide. That those are things that the court have to decide. But as far as just comparing XRP to how they raised funds, because the main issue is always how they raised funds. They do ICO, initial coin offering, and then they raise funds, and then that's usually considered or looked at as security. But even though XRP did that, they were still not considered security. So let's see how this unfolds. Right now, that's the main news right now in the news. And but for me, I don't think that it's a big deal. It's just to see how they can get at a lower price. They can enter the Ethereum at a lower price. So now that we have the news behind us, let's get to today's topic. And keep in mind, the second option, I'll mention it as we are progressing during this session today. Again, there's a blueprint to a sustainable ecosystem, and this blueprint is tested and has been tried. And let's start right away with it. Let's highlight one thing here, because in the crypto space, there is even this coin market cap. Even the name suggests it's a listing of different tokens based on their market cap. What we want to highlight today is that the blueprint, as you will see today, is liquidity. And like we showed you here, without it, there is no bull run. And at the same time, if there's abundance of it, it triggers the bull run. So with this, why am I showing you this? These are the so-called Magnificent Seven. These are based on market cap again, as you see here. These are the largest companies based on market cap, as you see here. And keep in mind, there's a difference between market cap and liquidity. This is the bottom line. This is what we want to highlight here. This is the takeaway here. Now, if you add up the top 4 largest companies in the world based on their market cap, add up from Microsoft, Apple, Nvidia, and Saudi Aramco. Microsoft, as we know, they're in the business of providing operating system for your computers, your personal computers. Probably every one of us right now is either has a Microsoft software on their phone, on their tablet, on their personal computers, or just to be able to read documents, open documents, edit documents, or use those applications. So they are large. It's a large institution. Apple, probably some of us already have their products either in the form of a smartwatch, of a smartphone, of an earpad, a pad itself, personal computer, laptop, whatever it may be. As we know, they're the largest. NVIDIA is basically feeding Microsoft and Apple, because without their microchips, there's nothing. Like they run the world basically. And even the whole Bitcoin mining scene is using NVIDIA's micro GPU to process the mining, to process the Bitcoin mining. So NVIDIA plays a major role as far as microchips. The whole gaming industry, the mining industry, all these hardwares need NVIDIA. Saudi Aramco, I don't have to get into details, self-explanatory. There are oil magnates, the largest oil from Saudi Arabia. They also refine oil. So take all these major institutions, add up their market cap, and you still won't have, you'll come close to BlackRock, which is 9 trillion, 9.4 trillion. The difference though is we just calculated their market cap. But if we look at BlackRock alone, this is not their market cap. This is their liquidity. This is what they have liquid with them. So why am I showing you this? Let's go further. If you want to compare the Magnificent Seven with BlackRock, look at their market cap, 120, less than 122 billion. It's nothing, right? 122 billion in market cap doesn't even put them in the top 17. They're not even the top 20, right? They're anywhere close. So this just shows you that don't be carried away with market caps. They don't mean nothing. What people care about and what really matters is liquidity. Actually, liquidity is so important. There's an entire industry, and we'll pay attention. We'll look at these step by step. So the largest, most valuable company in the world are not the ones that we are buying softwares from and using on our gadgets, or the gadgets maker themselves that we are using to hear music, listen to music, use for our daily purposes. It's not even the NVIDIA that gamers are using, or car manufacturers, or Bitcoin miners, and it's not even the most used black gold known as oil. It's not that. It is a business that is into the liquidity business. Asset managers are into the liquidity business. As simple as that. Liquidity plays a major role, and none of these companies come anywhere close to the value of one of these liquidity providers, which is BlackRock, and let alone the other ones. So this is just to show you that we need to really put away, or not get carried away with market caps that really are not a measure at all. They're not a stable and sustainable and an accurate measure of the value of a company, but rather it is the liquidity of it that is more valuable. Because how the most valuable company in the world, that is the second largest economy if it was a country, only has a market cap right below 122 billion. So this, if you compare, you can't compare it, right? You can't compare it. So anyway, let's move on. How important is liquidity? Look at where they are right now. 67 billion in liquidity right now, just the ETFs alone. They accumulated this within 2 months. This is impressive. This is very impressive. What our community, the crypto community, is lacking is the basic understanding of creating a product or creating an ecosystem, a community that is sustainable, that is efficient. And we've been schooled by Wall Street for the last 2 months in a very, very exceptional way. And for me, this is a masterclass at its best, because this is something we've been discussing for over a year now. And we see it in full effect happening right in front of us. And it's just impressive. How important is liquidity? This chart shows it again. The more liquidity these ETFs have been accumulating, as you see, the chart just keeps going up. This is the volume, because volume and liquidity go hand in hand. The more liquidity you accumulate, the higher your volume is. Now, let's put something really straight here. BlackRock and their comrades, they're not here because they're passionate about our freedom, our lack of centralized institutions in between, because they're not here to empower us to be our own banks and hold our own assets and have our own keys to our own banks. No, they're here because it's lucrative. It's extremely lucrative, okay? And if you keep in mind the accomplishment they achieved in accumulating 67 billion within 2 months and having a daily volume of 157 billion, it's just unbelievable. Because if you look at our largest asset right now, they're stuck at 1 billion. And this is why we say efficiency is very important. You don't have to reinvent the wheel, but you can make things more efficient, more sustainable, and more scalable as well. And only because you're the first iteration just shows that it doesn't make you perfect. There is no perfect blockchain out here. Everybody has their flaws still. But those who come later, like us, into the market, like 14 years later, we have the opportunity to study those who came ahead of us and then understand what are their strengths and what are their challenges. And then now we can use their strengths and keep them. We don't have to reinvent the wheel. We can look at their challenges and then improve on those challenges, make them better, more efficient, more scalable, more sustainable, right? So this is just to show you from a bird's eye view. For one, don't be caught up with market caps. They're not a real measure. Focus on liquidity. That's the real measure of a project, of an ecosystem. And it is the liquidity that really triggers the bull run at the end of the day. It's not the Bitcoin halving. It's not the hype. It's not the ETFs. Eventually, it will be the interest rate cuts that we're all anticipating. And after that happens, we are forecasting 3 of them this year. So once that happens and liquidity really gets to the level, and it will explode way above the level of last year. Because even now, look already where we are, and we're not even nowhere close. So this is what we're waiting for the liquidity to get flooded into the markets, and then we'll go from there. So with that said, community, let's understand one thing here. Let's look at something real here. Like I say, BlackRock, they're not here because they admire Bitcoin or any other cryptocurrency for our benefit. They're here because of the revenue they get. They charge management fees, right? And if you take 157 billion and just multiply this by 0.2%, which is like right now the average, they lowered the fees so much. And let's do this. 157 billion, right? And we multiply this by 0.2%. So you see here, it's 314 million. That's how much they make in one day, just charging a 0.2% fees. And usually management fee is a 1% actually, so 5 times that. And this just shows you how lucrative the business of liquidity is. The more liquidity you have, the more revenue you can generate, because transactions and revenue go hand in hand, because that's how they make their money. They generate income for themselves and for their shareholders. Wherever you see liquidity being accumulated, you'll see the volume also rising heavily alongside it. And we've seen this multiple times, and this is why even as we see now, even though, for example, Tether has 10 times less market cap than Bitcoin, but it has double the volume like Bitcoin has. It's close to 100 billion in volume, even though it has 10 times the market cap. But Bitcoin, with 10 times, actually 12 times the market cap, it only has 50 billion in volume. This once more just confirms that don't be carried away with market cap, because it's the liquidity that sets the tone and makes the difference. Let's move on now. There's a trend right now going on, and this trend is called RWA. Well, what does RWA stand for? It's real world assets. Right now, that's the buzzword right now. And this is what Larry Fink has been talking about. Larry Fink is the CEO of BlackRock. And he's been talking about tokenizing everything in the real world. We're not going to spend a lot of time here, but I just want to highlight certain things so that we understand. We really need to understand the blueprint of this, because we'll really appreciate our ecosystem after this. So this is an entire new industry right now, known as real world assets. Everything is getting ready to be tokenized, and it started with real world assets started with fiat-backed stablecoins, right, such as Tether. And we just saw how liquid Tether is, and this is the first real-world asset that was used or is being used currently in the crypto space. Of course, introduction of DeFi back in 2020 was also introduced in 2020, and because the bear market in 2022, it slowed DeFi down, and it also slowed the RWIs, the real-world assets, and what this usually is they cater to the needs of those who are on those investors that are using the blockchain. So it's literally a bridge. It's an intersection between the real world and blockchains, and also between the issuer of the asset and the investor. In short, there are the so-called market makers, meaning that real-world assets, the engine that drives them, like this is a question to you. What's needed if you are between the issuer and the investor? So you are holding the real-world asset that is tokenized, and you are in between the investor and the issuer. What do you think is needed to make this happen? Hold that thought. Let's move on. Here are 4 different real-world assets that are really being used right now. And to get a better understanding of what real-world assets really is, just 1 or 2 phrases here. Real-world assets in crypto refer to tokenization of tangible assets that exist in the physical world that are brought on-chain. This includes the growing issuance of capital market products. So capital market products are usually ETFs and all that, so very liquid products. And we're bringing these on-chain, where digital securities are tokenized and offered to retail customers. Okay, so examples of these include real estate, art, commodities, and stocks that can be purchased through permissioned platforms. Okay. This is all we need to take away from here. Now let's look at the different forms. The different forms is, for example, the US dollar pegged denominated fiat stablecoins, right? Such as Tether and USDC, right? So that's the first real world asset that is being used, and these are pegged with real world assets such as US treasuries, which are US debts. They're backed by US debts. So the first one, as we see, is the majority of the world asset is the US pegged stablecoins. Okay, that's the largest one. What's the second one? Is commodity backed token. Currently, with just above $1 billion in market cap, is gold. Gold is the largest commodity right now that is being traded on the blockchain, backed by real commodity. So there's a token traded on the blockchain that is backed by gold, and its market cap is really low right now. It's sitting at $1 billion. That's the second one. So we have stablecoin, we have gold as commodity. What's the third one? The third real world asset can be, like we say, treasury products. These are treasury bills. Treasury bills, like we'll see further as we go through this session today, are debts, US debts. And these debts generate revenue. And this is how Tether has been making tons of money. We'll see that later on in this next slide. And this is the next one, tokenizing treasury bills, tokenizing US debts. So you create a token that represents US treasury bills and you trade it on the market. These are called derivatives. So next is credit, private credit. So these are other tokenized real world assets. So you can provide private credit, and usually it's from the automotive sector. 42% of these loans are, as you see in the chart, go towards car loans. So far, it hasn't been expanded. So this just shows you the use cases that are about to enter the space. Here we are again, showing you that how much liquidity is about to enter this space. Those are just 4 examples of real world assets. And these assets, guess what they'll need to be traded? And this is what this article is actually telling us, is that we'll need liquidity, right? This is the answer to the question that we raised. What is between the issuer and the investor? Liquidity. Now you need to be trading to trade these real world assets. We need liquidity, right? So liquidity business is booming, and we've seen here that the company that are fully involved in liquidity are the largest ones, led by BlackRock. Okay, then Vanguard, Fidelity, and all of the other ones. So if you're into the liquidity business, you'll be very profitable, and this is where the future lies. It's not Microsoft or Apple or Nvidia. No, it is asset managers. Liquidity is running the show. So now that we've established and we've have a better understanding of what we're looking at, and now that we understand that at the intersection between real world and blockchains is liquidity, between issuer and investor is liquidity. What triggers the bull run is liquidity. And this is very important. Now, let's move on to the next step now. We discussed US Treasury bills. Let's look at the title here. BlackRock is not in the industry for no reason. They're in the industry to make money. Tether alone, the last quarter, they made $1 billion in profit every single month. So this just shows you how lucrative it is to be in the business of liquidity. If you have liquidity, there's so much revenue to be generated. And those with liquidity, the deepest liquidity, generate the most revenue. So it's not by coincidence that the largest cryptocurrency based on volume is the one that generates the most revenue, right? So it's a given, because that's what happens. If you have liquidity, you have something beautiful. Liquidity is a gold mine. It's very important. So it's no surprise that the cryptocurrency with the largest volume is the one that generates even more revenue than BlackRock itself. But this is about to change now, because this is exactly the latest news right now. And community, this is something that we've been discussing now for the longest, and we'll summarize it at the end. BlackRock now has finally launched their own token. They launched their own tokenized investment fund in partnership with a company called Securitize. And now they have launched their own token. To be part of it, first of all, you have to have at least 100,000. You have to have at least 100,000, a minimum of $100,000 to just be part of this. Like we said, BlackRock is launching a tokenized private equity fund in tandem with the financial service firm Securitize. And this company they're experts in digital assets, like in real world assets. Now, we've been discussing about liquidity. We've been always talking about liquidity for over a year now. Here comes Wall Street, and look what they name their fund. It's a liquidity fund, basically. It's a US dollar denominated liquidity fund. So what did we tell you? That in order to accommodate all these real world assets, like in a gold rush, whoever makes the most money during a gold rush is the one that sells the shovels, right? So if you want to make money during a gold rush, just be a shovel salesman or shovel saleswoman. And same thing here. If you want to be in charge, if you want to be a global leader in the financial industry, all you need to do is provide liquidity. That's it. Be a liquidity provider. And this is what they're doing right now. This is what BlackRock now entered the game in doing. They're creating a liquidity fund that you have to have a minimum of 100,000 to just participate in it. It's a token that is, they tell us right there in front of us what it is. It's for liquidity. And it's on the Ethereum blockchain as we speak. You can monitor it on the Etherscan. It has a maximum quantity of 100 tokens. And we have to do the math. So let's move on here. There's 100 tokens, right? There's 100 tokens. So 100 tokens, and they already put in $100 million in USDC. It's not a coincidence that they chose USDC. So, and it's not a coincidence that they chose Ethereum. Why did they launch on the Ethereum blockchain? Why not Solana? Solana is cheaper, faster. Why not Solana? Why Ethereum? Because Ethereum is the only blockchain that has a deflationary mechanism tied to its transactions. That's how smart money thinks. They don't care about the fees. They care about the deflationary aspect of Ethereum. And Ethereum is a blockchain that keeps adapting, keeps upgrading. So the only flaw of Ethereum is the high gas fees, but it's the most deflationary and fundamentally sound as far as token supply fundamentals. There is no other layer 1 blockchain like Ethereum, because they tie their transactions directly to their deflationary mechanisms. The more you use Ethereum, the more it burns. And this is why BlackRock chose Ethereum despite the high fees, because in the long run, you are accumulating an asset that is deflationary. There is no asset that is deflationary. Not even Bitcoin is. Bitcoin is inflationary. That's besides the point. So this liquidity fund is launched on the Ethereum blockchain. There's only 100 tokens, and the initial investment is 100 million in USDC. So we have to look at the math. If you multiply these 100 tokens by 100 million, you get a market cap. We just discussed that market caps don't matter. But in this case, we have to just look at where it will stand. So if you multiply 100 million by 100 tokens, you get 10 billion in market cap. If we come here to market cap and look at where would 10 billion put you? So you'll be in the top 15 with 10 billion. So without even a single trade, without even being an active fund yet, they're already the 15th largest cryptocurrency right now as we speak. And this liquidity fund is generated to accumulate fees. And it will generate so much fees for them. It will be so profitable for them. And let's look at further. This is not just your ordinary token. This token, what it does, it actually gives you, it actually gives you 1% distribution. It gives you distributions, by the way. Let's look at it closer. First of all, they're heavily investing in 100% in US Treasury bills. Does that sound familiar? Does that ring any bells? This tells you that it's a stable coin. They're entering into the stable coin arena. They don't just have a regular stable coin. What happens here is that they allow their stable coin allows investors to earn yield while they're holding the token on the blockchain. So their stable coin, of course, a stable coin, it's at $1. It will always remain at $1 per token, $1 per token, and it pays daily accrued dividends directly to investors to their wallets as a new token each month. So they started with 100 tokens, right? We saw here it's 100 tokens. But these 100 tokens will keep increasing because they're paying you in these tokens on a monthly basis. And one token is $1. So this is how they want to expand their stablecoin. And they have a very solid stablecoin because this stablecoin pays you dividends just for holding it. So why do you think they're doing something like this? Because there's nothing like it out there that has a brand behind it. And because they understand that it's extremely lucrative. Why would they let an offshore company make this type of money and they are the leading asset managers? They had to jump into the game. And finally, now they have their own token on Ethereum using the Ethereum blockchain. And they're into, if you hold this token, they give you monthly revenue in this in their own tokens. So this is a major deal right now. And the irony of all of this, guess who is involved? Coinbase, right? They provide key infrastructure for BlackRock's tokenized investment fund. So it's Coinbase that is involved with BlackRock, right? And Circle is involved because Circle, this is paired with USDC like we saw here, right? We saw that it's USDC, it's paired with USDC right now. This is where you see it. So now that we understand 100 million worth of USDC tokens are being used, so Circle plays a major role in this. At the same time, 100%, the fund invests 100% in cash, and digital cash is USDC. So in USDC and US Treasury bills. US Treasury bills is US debt. So this takes us to this level now. Do you see where we are heading here? Circle, which is the USDC issuer, their goal is to be a full reserve banking for digital currencies, right? This is the aim. They want to be a full reserve digital bank. The key here is full reserve. That means that it's not fractional reserve like right now. There is no full reserve bank in this world. There is nothing like it. So with the help of BlackRock and Coinbase, this fund that BlackRock is in just opened is focusing on purchasing US debts, and they pair their private token with USDC, right? Because they're working together in tandem to accomplish this goal right here, to be a full reserve banking, digital banking system. There's an interesting, let me read this. This individual called Michael published a groundbreaking paper where he argued that had the US adopted a full reserve banking model as proposed during the Great Depression, the US would have seen both higher output, fewer recessions, and lower levels of debt. So this right here would not be the case. If you have a full reserve banking system, you are running on a liquidity monetary system and not on a debt system. It's important that we understand what's happening here. And this is something we've been talking about for over a year now. Remember when I made this video a year ago? This was 1 year, as you see here. This was 1 year ago. I titled it was called Crypto Market Chaos or Part of the Grand Master Plan. And this is when I was highlighting these major players. Circle was one of them. Goldman Sachs is the second one. BlackRock, right? And Coinbase. Those are the 4 players. And if we see here, Circle plans to become a full reserve national digital currency bank, right? And who is here? Goldman Sachs backed digital payment company Circle has officially disclosed plans to become a full reserve national digital currency bank in the United States. So this video was done over a year ago, as you see here, calling out these 4 players. Again, Coinbase, you see here, Coinbase, BlackRock, Goldman Sachs, right? And Circle. And these are the same players that we're looking at right now, right? We see BlackRock, right? BlackRock is here, and BlackRock is using USDC right now, stable coins, and they're purchasing US Treasury bills to help Circle to become a full reserve banking digital currency, right? And they're backed by Goldman Sachs. So we've seen this from 1 year ago happening, and here we are now. It's happening right in front of our eyes. All of this is unfolding right in front of us. Like we could see the future a year back. So this is what's happening if you understand how the industry works. The industry works not by market cap and not by companies that are producing goods, because even they need liquidity. Without the liquidity, they can't produce goods. They can't ship out these goods and do logistics. They can't manufacture nothing without liquidity. Everything runs through liquidity. Liquidity runs the world. And the sooner you understand this, the sooner you will be able to see this industry with different eyes, and you'll be able to tell things before they even happen, because it will be like common sense. You'll see things happening right in front of you, because you'll realize that without liquidity, there is no bull cycle. There is no bear cycle. There is nothing. Everything runs through liquidity. Now, let's not trust. Let's verify, okay? Let's use this article to verify what we've discussed so far for the last 1 hour. So here we see the world's largest pension fund, okay? They're exploring Bitcoin as an investment. Hold your thought. They're not Bitcoin fans. They don't believe in Bitcoin. That's not why they are exploring Bitcoin. The reason why they're exploring Bitcoin is because they're into the liquidity business. How did they become the largest pension fund? Because they provide liquidity for illiquid assets. That's what they're in the business of doing. They're in the liquidity business. Let's look at it even closer. Japan's government pension fund on Tuesday said it is requesting information on illiquid assets such as Bitcoin. We've been talking about this forever, how illiquid Bitcoin is, right? And they want to take advantage of illiquid assets because there's a lot of money to be made if you're liquid, right? So as part of their research into potential new investments. Now, the Government Pension Investment Fund of Japan, which is the largest pension fund by assets under management on several different rankings, said it's looking for basic information on what? Illiquid assets, other than those in which they already invest. So being liquid, having liquidity is an entire industry. This pension fund became the largest pension fund because they provide liquidity to illiquid assets such as Bitcoin and such as these ones that are about to enter the space, which will be real world assets, right? Such as real estate, right? Stable coins already providing liquidity, commodities, all these real world assets. What will they need? They'll need liquidity. And they are here to provide just that. This is just to show you the importance of liquidity. So this is your verification of what we've been talking about for one whole hour, is the power of liquidity, the importance of liquidity. There's an entire industry. They provide liquidity for illiquid assets, and they're earning major fees doing that. They get paid lots of fees for providing liquidity. So if we stress on liquidity and talk about how important liquidity is, latest by now, we should all understand how important liquidity is. And it's a shame that we've been in this industry for 15 years and we still haven't figured out how to be efficient, not even with our largest cryptocurrency. Have we found out a way how to be efficient, how to use all this volume, how to retain liquidity? But it took BlackRock and their comrades less than 2 months to acquire such a large amount of liquidity and accumulate such a large amount of volume, which is just unbelievable. This is because they understand the importance of liquidity. And they went a step ahead, and now they even have their own stablecoin. Who would have ever thought that BlackRock will come up with their own stablecoin? And not just your average stablecoin, one that actually pays you on a monthly basis, right? Just by holding it. So these are mechanisms that, this is a news that just came out, right? So having an asset that is stable and liquid and that incentivizes their holders for just holding. Does this all sound familiar? It took smart money 2 months to literally take over the crypto space. And this fund is dedicated to real world assets. Now that they have their own stable coins, now they're tokenizing everything. And they'll be using, guess what they'll be using? USDC is what they'll be using to back their own token. So stablecoin with a stablecoin that is interest bearing. This is a powerful session. And they're using USDC, which is issued through Circle, to become a full reserve banking digital currency system. And this is what we've been talking about for over a year now. Trying to explain the importance of liquidity, laying out the master plan, okay, what this was happening. And this is what sets us apart, community. We see things a year before they happen. And now what we've been talking about, it's happening right in front of our eyes. And we see how those who are implementing liquidity the right way are the largest companies in the world, because they understand how to use liquidity efficiently, effectively, and how to put it to work that it benefits not just them, but their shareholders. This is what we mean that you don't have to reinvent the wheel. If you see things that work, implement them, take them, apply them, add them, just make it more efficient, okay? Like, make sure that we avoid inflation, make sure that we are scarce, make sure that we retain liquidity, and make sure that excuse me, I had to drink something. So this is why it's important to not reinvent the wheel, but be more efficient, be more sustainable, and make things more scalable as well. And this is what we did by understanding how the industry works, what's lacking in the space. And this is why these big actors, they're actually addressing all these major issues. There is no full reserve bank. They're here to solve it. There is no liquid asset that is fully backed. And they don't have an asset that they can actually, just by holding a loan, they're receiving a yield. This is massive. So in short, USDC is getting ready to become the largest stablecoin in the space, because every real world asset from now on is going to go through USDC, period. And they're going to become the US digital full reserve bank, a global bank. So this, of course, affects us in a positive way because we are paired with USDC. So this is something great. So each time USDC is in news or being talked about in a positive way, it's good for us as an ecosystem, because by staking BRL, you receive the most used stablecoin and the stablecoin of choice that BlackRock is using. So with that said, community, I can't play this that you can hear, but let me do this. Let me put this in the chat for you. And at your leisure, for those who have not watched it yet, I really encourage you to watch it. You'll get a better understanding of what's going on. And this is the reason why we always talk about the entire industry, because you need to understand what's going on. Crypto is larger than just a token. Crypto, you have to understand the entire ecosystem, the entire industry, have a solid understanding. And if you have that, you'll appreciate our ecosystem, because you'll see how we are forward thinking and it's for the long term. And everything that we put in place, we see now smart money doing it, you know, and we see the world's largest pension fund is in the liquidity business. They are here to provide liquidity to illiquid assets. That's all they want. This is how they became the largest pension, because they provide liquidity. They have liquidity. They provide liquidity to illiquid assets such as Bitcoin. And this is the importance of liquidity, community. There is nothing that goes beyond it. Now, let's move forward. If we look at this, I just told you that liquidity has not entered the space yet. So we're still looking forward to massive liquidity entering the space, right? These large institutions are gearing up. They're getting ready. This is why, like we just saw, BlackRock is getting ready. They already put in 100 million in USDC. They're starting a new liquidity fund, and they're getting ready. And here you see Tether is also getting ready. They already minted $1 billion worth of USDT. Why did they do this? In preparation. Okay, this is why they did it. Tether, a staple of digital currency market, is known for what? For its role in providing liquidity. So, I mean, everything leads to liquidity. It's providing liquidity, and liquidity brings what? Stability. If you have a liquid asset, it's a stable asset. So this is why we stress on liquidity. It's in so many fronts. And this is very important for us to really understand the importance of it. And this is how we really appreciate what's going on in the industry. And this gives us a better understanding, and we have a broader picture and a better idea of how complex our ecosystem actually is, and how it's addressing all these challenges in the space that are being addressed with these large, big name asset managers, because all they're doing right now is pushing around liquidity, setting up everything so that once real world assets need to be traded, like we saw here, how else will they be traded, right? These are intersections between, these intersections will be pivotal to the success. So what's the intersection that is pivotal to the success? It's liquidity, right? What is between the issuer and the investor? Liquidity. What is the intersection between real world and blockchain? It's liquidity. Wherever you go, no matter where you read, all you'll see is the importance of liquidity. And this is the message for today. That's the blueprint. And we've been talking about this for over a year now, and now it's unfolding right in front of us. And community, this is one thing that we have to understand. Everybody's preparing for what? For liquidity. It's not here yet. It's coming. And how come we let Wall Street do all this work? They're preparing themselves. They're putting things in order, lining everything up, while we, after 15 years, we have nothing to show for, literally nothing, besides a horrible liquidity to market cap ratio. We are not efficient, we are not sustainable, we're not scalable, and it took Wall Street, so-called smart money, 2 months to just find out how everything works, school the industry, and take over, while we still don't understand the importance of liquidity. So in summary, what are we doing different? We have to avoid the current monetary system. So besides what we've discussed, the importance of retaining liquidity, because now we understand that liquidity is at the core, plays the major role to trigger the bull run. If there is abundance of liquidity, the bull run gets triggered, right? So there is no liquidity yet. That's why you see Tether preparing, putting aside $1 billion they've minted, but it's not in the circulation yet, okay? And it's not in circulation, not yet. It's here to provide liquidity and stability once the time comes. So it's in anticipation of once large investors start to enter the space, it will be serving to accommodate them right here. This method of liquidity management is crucial during periods of what? Bullish market activity. There is none yet, where large capital movements are common amongst investors. So they're already preparing these billions of dollars in USDT, in stablecoin, because they're known for that, to bring liquidity, to provide liquidity into the market once liquidity is needed. So they're just putting that in inventory, waiting for the interest rates cut to go through and the liquidity to be flooded into the market. So everybody's positioning themselves. This is how smart money operates. You think ahead, you anticipate, because how can you anticipate, how can you think ahead if you have no clue of the industry, if you have no clue what's going on, what are the cycles, what are the boom and bust cycles, what actually triggers them, how does the industry works, what are the challenges in the industry, and how do we go about addressing these challenges in the form of opportunities? Is your ecosystem addressing these challenges? So these are the things that sets us apart and that nobody else seems to really focus on, and are losing sight and are losing time. How come it took them 2 months to figure everything out? And we've been in the industry for 15 years and we still have not figured out. And we're still dragging our feet. We don't want to make any changes, any adjustments, be more efficient. It's embarrassing for us as an industry to see that Wall Street has to come and be the adults in the room and do things right, But at the same time, it's encouraging for us to be knowing that we've been on this right track. We've been talking about this for 1 year, This is what we've been preaching all along. This is what we talk about every session. We've been talking about the Grandmaster Plan that is happening with these actors, and exactly the same actors that we spoke about a year ago. Here they are. They're right here doing exactly what we say they're about to do, okay? Dominating the industry by doing exactly these things. So all we need to do right now, that we understand all this that we've been discussing for over an hour now we can zoom in, okay? Now we can zoom in. And as we're zooming in, we've been only talking about what? One of our four. We have 4 pillars of solutions. And we've been just discussing that one. That one is the one that is the fundamental. We've been just talking about fundamentals right now. We haven't even touched the other 3, which is education, security, and social network. We've been just focusing on liquidity alone. And this, I hope by today's session, we can all understand and appreciate the importance of liquidity. There's an entire industry, which the largest pension fund of Japan is investing in illiquid assets by providing liquidity. Liquidity is a global issue and it's very lucrative. If you have it, you rule the world, just like we see here. Those who have liquidity rule the world. Yes, they might not have the largest market cap, but that's irrelevant. They don't have the largest market cap, but they have the deepest liquidity. So this is the message today. The blueprint has been in front of us all along. And these smart money just came in. Wall Street came in and did this in 2 months, what we couldn't do in 15 years as an industry. And this is both good and bad, because now the industry is being taken over by Wall Street. They are the adults in the room right now. So it took adults to be in the room to really get it straight. And I'm glad that they're leading by example. What we've been talking about is being done, executed right in front of us. The blueprint is being executed right now. And now when we talk about liquidity, I hope more people will pay attention, because they understand now this is where all this is heading. This is what these players are doing. It's a game. It's a rigged game. And if you don't play and try to beat them in their own game, before you know it, the 99% will be now shifted on the blockchain now. What's happening in the real world is now going to happen on chain, because they will own all the liquidity. Because this is what they're putting together. They're putting together a system where they own and accumulate and hoard all the liquidity in the industry. They're getting ready to provide liquidity for every real world asset. Real world asset. They already have a fund going. They are positioning themselves and preparing themselves and getting ready to turn the 1% to dominate the 99%. Business as usual. And here we have an opportunity for once to be early in an industry that we can really make a difference. And if we don't understand what we have here, it will be just another, we'll be doing the same thing on the chain now. The 1% will rule. Actually, not the 1%. The 1% of the 1% is going to rule the 99% on the chain now. Because we still don't understand after 15 years how to be efficient, sustainable, scalable, and how liquidity plays a major role. But thank goodness we have the ecosystem prepared here. And this is why we go about retaining it in 3 different ways, like we always discuss. The obvious way is through the taxes. 6%, half of that goes to retaining liquidity, which is very important. Now that we understand the importance of liquidity, I'm sure we'll appreciate it much more. And we are not just retaining it through the taxes. The good thing is that we have an ecosystem that is scalable, meaning as we grow as an ecosystem, we are also offering the staking boosters, meaning that these NFTs can be purchased to boost your USDC distributions to 100%. If you don't have them, all you'll get is 70% of your distribution, of your USDC distributions. So we incentivize those who purchase these boosters. And if you buy up to 5 of them and stake them, you receive 100% of your USDC distributions. And this is how we scale our liquidity, because now we use 100% of the revenue generated from here to build us and sustain a healthy liquidity. This is the second way. The third way is by putting aside 10%, staking it, and then using the USDC distributions that this 10% is accumulating to put right back into the liquidity pool. So these are 3 ways organically that we add liquidity into our ecosystem, making us a very sustainable ecosystem. Of course, we are also addressing the inflation. Inflation is poison. And most of the staking platforms, as we know, they're very inflationary. And this is why we are addressing it by banning tokens. So we use 1% to ban tokens. And the way we do that is we started at 1 million in total supply. Now, if we see here, we are scarce. We are not deflationary and we are not inflationary. We are actually scarce. So at least you should be deflationary, right? Like Survivor is. You should be deflationary. Your largest wallet, if you go to Survivor, for example, the largest wallet right after the liquidity pool is the ban wallet. This is what you want to see in a project. You want to see that it's deflationary and it's accumulating these tokens, locking them up in a wallet that is blacklisted, never to see the circulation again. This is what you want to see. This is the minimum that you should have, a ban wallet that removes tokens from circulation. If you want to take it to the next level, you actually remove the tokens from total supply. That's like the highest level you can go. This is now scarcity now. And there is no staking platform that is scarce. Staking platforms are inflationary, just like the current fiat system. Just like the current fiat system is right now. But our staking platform doesn't just tuck away 58% of the total supply, locking them away, but it's also with every trade reducing the total supply to 971,000 right now. And this number keeps decreasing. Now, keep in mind, when we talk about efficiency, we'll do some numbers before we close out this session. But just to show that our ecosystem is so efficient that we only need a fraction of this volume right here. Only a fraction. We don't even need the 40 billion. That will come over time because the more liquidity you accumulate, as you see here, the higher the volume is going to be. So we're not worried about volume. It will come as liquidity is growing. And as we saw here, liquidity is nowhere near and has not been triggered yet. There is no liquidity being flooded into the markets. It won't happen until the interest rates get cut at least 3 times. So we're still looking forward to a huge catalyst that comes ahead of us. And we have the ecosystem to retain liquidity during all of that, to ban tokens. So we are addressing the inflationary challenge, and we incentivize as distributions, USDC, our stakers, those who decide to bring stability to our ecosystem, these right here, these individuals, the largest, the number one wallet, these individuals who stake their tokens, they're incentivized to receive the USDC distributions. And if we pick this wallet right here, which is a staking contract, we see that it's been accumulating. Now it's up to $900 in USDC. With a significant volume, it's going to accumulate even more, right? So the more liquidity you retain, the more USDC, the more volume you get. And the more volume you get, the more USDC distributions you accumulate. So this contract is set to accumulate 1% of the volume goes towards USDC. Is being transformed into USDC. So this is an ecosystem that is addressing the three major challenges in the space: lack of liquidity, inflation, and unsustainable staking distributions. And the fourth issue is not tying your volume. Let's look at it. Not tying. This is why BlackRock chose Ethereum, because Ethereum is tying its transactions directly to its deflationary mechanism. The more transactions you see happening on the Ethereum blockchain, the more deflationary Ethereum becomes. Even as I'm speaking, you see how it's 630, it turned to 629. This number keeps decreasing because they're burning more 1,400 ETH a year than they're issuing. So this number you see here keeps decreasing. It was 630, now it's 629. So you see how, and now it's 628. This number keeps decreasing. It's a deflationary token based on its volume. And it's the only blockchain in the space right now that does this, that is deflationary. This is why BlackRock chose Ethereum. Despite the high gas fees, the fundamentals are strong. And Ethereum is limited by tying only its deflationary mechanism to the volume. We went 2 steps ahead and are tying liquidity to our volume as well. And the USDC distributions. What does this do? This means that we are sustainable. Because as long as we are accumulating liquidity, we'll be having high volume, right? Like we saw here. The more liquidity you accumulate, the higher the volume, just like this chart is demonstrating. And if we go back and say, so the more liquidity we accumulate, the more volume we get, right? And the more volume we get, the more liquidity we get. So it's like a positive feedback loop. The more liquidity, the more volume. The more volume, the more liquidity. And the more burning that is happening, and the more USDC distributions you're earning as well. So let's do some math to close out. Let's finish this up. Like I said, we are such an efficient ecosystem. We don't need billions. We will get there. But just to be modest, let's pick the lowest ranked community token. The lowest ranked community token, if we go here, is Bonk right now, right? Bonk has 1 billion. Bonk has 277 million in volume right now. Let's call it 100 flat. Let's just take 100. Okay, let's just take 100 of the lowest ranked community token, and let's just go through some numbers here. So if we take 100, and let's multiply this by 1%. So this is 1 million, right? So 1% of 100 million is 1 million. So this million, what does this mean? This means that $1 million of BULLRUN is being burnt and removed from the total supply. $1 million worth of it right now. So let's understand something. Right now, the price of Bull Run is 51 cents, right? So let's find out how much we'll be burning if we multiply this by 51 cents. This is unbelievable. Like, how is this even possible? This is more than half of the supply. So if we had 100 million in one day right now, in one day we would be cutting, we'll be slashing. Right now we have like what? Let's go look at it. Right now we have a supply of 971,000, right? Based on 100 million, we'll be burning more than half of it. We'll only have less supply. So this is how efficient we are. This is why when we were saying that all we need is 30 days during the bull run, just give us 1 month. I was actually exaggerating. One day would be even enough. But just to be modest, we give each other a whole month. So during a liquidity rush, which we are nowhere close yet, give us 1 month. And we just calculated here if we had the volume of the lowest community token, which is 277 million, we only took 100 million. So let's say we reach that eventually. We would have been burning right now more than half of the supply in one day. This is just one single day. And but we give each other a whole month. So you do the math. You think about it. Let's close this. Let's take that million again. $1 million will go towards USDC, right? 1%. 1% goes towards USDC. And if we go here, this is the staking contract, right? So instead of 900, in one day, we'll be seeing $1 million in USDC right now. 1 million. And this goes towards these individuals who decide to stake, right? It goes towards these individuals who decide to stake. And this amount is going to increase, of course. This amount is getting ready to increase because more people want to stake. Who doesn't want daily $1 million in USDC distributions? And what will that do? The traders will be extremely happy because they won't have to worry about those who are holding BRL to selling on them, right? Because they'll be busy accumulating USDC distributions and thanking the traders because the traders are bringing the volume, and volume adds more liquidity. Liquidity brings more volume. More volume burns more tokens and gives out more USDC distributions. Before you know it, you find yourself in a positive feedback loop that you can't stop. And once you hit a certain amount of liquidity, the volume just is unstoppable. And that's where we want to get. And we just looked at burning alone. And based on 1 million worth of burning, more than half of the supply will be gone in one single day, based on 100 million in volume. So let's look at liquidity now, right? We have to multiply this by 3. So 3 million in liquidity in just one single day. So in one day, our liquidity will jump from 261 to 3 million, just in one single day, over 100 million in volume. That's what you call efficient. It doesn't take us 15 years to accumulate 1 billion in liquidity. Actually, let's look at how long it will take us. So one day is 3 million, right? So if we multiply by 30, so it will take us, we'll have 90 million in a month. If we do for 1 year, let's do 12 months. So it will take us 1 year to achieve what Bitcoin achieved in 15 years, right? As a community token. So this is what we mean with efficiency. This is exactly what we mean with efficiency. And let me show you something else. You remember this chart? Bitcoin is the fastest to reach $1 trillion in market cap, right? It took Bitcoin 12 years. It doesn't take a genius to understand that with our ecosystem, it will never take us 12 years. It will not take us 12 years to achieve this right here. If it takes us only 1 day to burn half of the supply, just 1 day to burn half of the supply, it will never take us 12 years to hit $1 trillion. It will not. I'll let you marinate on that one. So this is just to show you the power of our ecosystem. It's superior and it's forward thinking, it's sustainable, and it addresses all the major challenges we face in the industry, plus more. And the major moneymaker, what is an entire industry, is liquidity. Liquidity is key. This is why the largest fund in the world is investing in illiquid assets. They provide liquidity so that they can generate revenue from it. This is why BlackRock is issuing their own stablecoin, calling it what? Liquidity fund. Because they understand that real world assets will need liquidity. So if you're forward thinking, if you're thinking about the future, you understand this is real now. The blockchain is here to stay. Real world assets are entering the space. What will they need? They'll need liquidity. So don't you think you should be part of an ecosystem that is accumulating what BlackRock is accumulating, what the largest fund in Japan, pension fund, is accumulating? Like, do we think that all these rules and blueprints don't apply to crypto? They do. So if you see successful funds, successful institutions doing what makes them successful, focusing on liquidity multiple times, multiple ways, don't you think you should also do the same? You don't have to reinvent the wheels. You can do it in a more efficient way by addressing the challenges such as inflation, lack of liquidity, sustainability, and then you create something that is even better. It took 2 months for Wall Street to literally hijack the space, and literally took adults to come into the room and show us how it's done. And this is exactly what the fund of Japan is doing. They're showing us how it's done. Okay, they didn't become the largest pension plan fund in the world because they have a software, or because they're producing smartphones and smartwatches, or because they have microchips, or because they are in oil. No, they became the largest institutions because they understand and they're in the business of liquidity. So I think the message came across, community, and I believe now we really understand the power of it and the importance of it. It's not here yet. It's not here yet, but it's coming. Liquidity is about to enter the space, and there will be no questions asked. Once liquidity enters the space, nobody will ask us, is BULLRUN here yet? You'll look at your wallet and you'll understand that yes, BULLRUN is definitely here. So this is the message for today, community. This is it for today. Like I said, BlackRock picked Ethereum to get their token running because Ethereum has the most sustainable and is a deflationary. It's the only deflationary blockchain right now built in its smart contract based on the transaction fees. To run an economy, you need transactions. To have transactions, you need liquidity. Once you have liquidity, it goes in tandem with the volume. Liquidity and volume go hand in hand. Where you find liquidity, you'll find volume. And this is how we developed our ecosystem. We focus on liquidity so that we can generate volume. Once we have volume, we generate more liquidity. We burn more tokens. We add more USDC distributions. And based on the current numbers that we looked at of 100 million, in one day alone, like we saw here, we would have burned more than half of the supply. In one day alone, we have 1 million in distributions, and it will take us only 1 year to hit $1 billion in liquidity. So this is it. And with that billion in liquidity, keep in mind, it will put us head to head, toe to toe with the largest cryptocurrency that has been around for 15 years. We'll achieve what they achieved as far as liquidity is concerned in 1 year. And after that year, it will probably take us 3 months to double that or less. Because the higher the volume, the more the more liquidity we accumulate. So it will take us less and less time to get to that next billion. And before you know it, with the most liquid asset class and burning half of the supply in one day without focusing on price, you can do the math. We'll hit $1 trillion much faster than Bitcoin. And because we have less supply than Bitcoin in the first place, we'll have a way higher price as well. And this is not our aim. This will be just because the fundamentals, you can't help it. This will be the byproduct. Just like Google's byproduct was, Yahoo's byproduct was a search engine. It wasn't something you are looking for. But because if you have strong fundamentals, this is why we ask the question, are you here for the technology or are you here for the price go up? If you're here for price go up, you're missing out. You're missing out. You don't see the big picture. So this is it, community. This is it. Let me share my screen with you again. Give me a moment. Time flies, really. Time has been flying. I've been having too much fun here. Let's call it a session, and let's focus on today's day 66. Let's put the word out, community. Let's put the word out so that we bring awareness of our industry, so that we can really have individuals come and learn about the industry, come and learn about the cycles, learn about finance, about money. What is finance? What is money? How does these cycles work? What is the blockchain technology? What is it all about? What are the fundamentals? What are the challenges in the space? There's so much to learn in this space. But we have an ecosystem. We have great admins, great community members that will help you, are happy to help you in your journey. So even if it's just for the education, feel free to join. We have the links already here, as you saw at the beginning. We'll be happy to embrace you in our ecosystem. We'll be happy to have you here with us. So as we see here, these are the links, the website, the Telegram links. Follow us on social media platforms. This is for Survivor. This is for Killer Whale, and we have for BULLRUN as well. Even if it's just for the education purposes, like we showed you, we've been spending almost 2 hours just talking about fundamentals. We haven't touched about the educational sessions that we have on a basically daily basis on Zoom, and weekly on different platforms such as YouTube, Telegram, Twitter Space, 3 times a week. So we lay emphasis on education because an educated community is a strong community that is not led by emotions, but is led by information and education and understanding. And that's key. And that's what's lacking in the space. This is why we do a lot of we make a lot of unreasonable choices because we don't understand what we're getting ourselves involved with. So we stress on that as well. And the tokens you see here, these are our 3 community tokens. That's part of the security. We develop these ourselves and we ensure that that we keep our community safe. As I'm talking, the killer whale is out. Survivor is out as well. So let's ensure that we engage with these tweets out there. And also, once more, thank you for all those that are making these tweets happen, from the banners to the labeling to the beautiful messages and informative messages on them. Thank you all participants as well. And community, the least we can do is to engage with these, put the word out, and bring awareness to our ecosystem, bring awareness to the industry, because there's so much to learn. There's so much to understand, and the learning curve is steep, but we are the community that are open to help you in your crypto journey. If you're new, we are more than happy to do that. Community, I'm going through let me go through your comments and see whether there are any other questions that you have here or feedbacks as we are engaging with these tweets that are going out right now. So let's be sure to engage with them. Let me see here. Uncle George, good evening, community comrades. Your enlightened, informative lessons are highly appreciated, Steve. Thank you so much. Very much appreciated for your warm words. It's always a pleasure seeing you in the community. Thank you for your positive energy, your encouragement, your consistency, your leadership in the community. You are very much appreciated, Uncle George. Queen Dumi is here as well. Saying greetings, PRL family, greetings, Brother Steve. Greetings back to you, Queen Dumi. Always a pleasure having you in the community as well. Thank you for your consistency, your leadership as well. It's always a pleasure seeing you here. This is the link to the YouTube video that we put out. We discussed this a year ago. Things that are unfolding today. It's just amazing. You know, it's amazing to see that we're on the right track. We can see things, and this is the good thing. If things are mainstream, that's the difference between the wealthy and the not wealthy. They can see things before they happen. Because if it's on the news, everybody talks about it. The taxi driver talks about it. Your hairdresser talks about it. Your neighbor's talking about it. It's too late. It's too late then. You need to be in something, understand something before it's mainstream. And once you can achieve that, you're in good hands. We have Hunter here. He's talking about there are links out here. Yes, the link is out here, Hunter. Everything is out here. Just follow the links and do your research. We have a library of information, education. So there's a lot to cover here. Welcome to the ecosystem. Nice having you here, Hunter. It's a pleasure. Brother Glenn asks here, part 1, with the bulldozer holding 10%, what and how does it purchase BRL tokens? Is it manual or is it automatic? And then when it purchases the token, are they staked or put in a wallet? No, Great question. Great question. It's manual because the staking right now, you see how if it was automatic, there won't be no USDC. So the moment we achieve a certain amount and we of liquidity, and we have consistency in the system, then we can start automating the things. But right now, it's hard to automate something if there is no consistent volume coming in. So these are the type of things we have to wait until we reach certain levels, hit certain milestones, and then we can start automating things now. And things will be now more automated. But for that for us to achieve that level, we have to have consistency, hit milestones as far as volume, liquidity, but we'll get there, and eventually it will be automated. And yes, you purchase and stake, buy and stake, buy and stake. That's all it does. That's what it's here for, just to buy and stake, because that's another thing. You see how everybody keeps talking about the danger of, for example, with Bitcoin. If you have more than 51% of majority holds Bitcoin, for example, you have the opportunity to change certain things, right? For us to avoid that, we implemented this. So everything that is done, there's a reason behind it. It's not just random things. So this helps also to accumulate, to have on a platform level. Our platform will be the one added to us, of course, as a community, will be holding the majority of the tokens, so that no third party, such as these pension funds or BlackRock or whoever, will come in and take over our community. You know, it's not going to happen. They can't do it. And this is the reasoning behind this, is to ensure that we always are in majority of the supply, at least the platform, on the platform level. Great questions, Brother Glenn. It's all about staking, purchasing, staking, purchasing, staking. So it removes tokens from circulating supply. At the same time, it adds liquidity into the space. And at the same time, it holds the majority of the supply, keeping third parties or bad actors to come and try to dominate or monopolize our system. Queen Lati says, good evening, family. Happy to find the presentation still on. Thank you, our teacher. It's always a pleasure, Queen Lati. Thank you for your engagement. Thank you for showing up and being part of this. It's such a pleasure having you here as well. Thanks for your leadership and your consistency as well. I see my brother Glenn has a part 2 here, and or the BRL being restaked when it does the buyback does. And is the 100% at the start growing, or where is the BRL that the bulldozer is buying back going if not staked? Of course, it's staked. That's all it does. That's the purpose of it. Like we showed it here. All it does, let me share my screen again, because it's a good question. I just want us to really understand, you know, these are things that we need to understand. Let me go here. It's on the website. The website says it all. All we do is staking and buybacks. You buy back and stake. That's all it does. Just buy back and stake. Use the USDC to buy back, stake. That's all it does. It's right here. So that's the whole purpose. And like I said, the reasoning behind it is to ensure that we won't be monopolized. No third entities can come and take us over, like Bitcoin is just being taken over and pushed around because lack of liquidity and not sustainable ecosystem that actually protects you know, the community from being taken over because lack of liquidity. So these are things that we thought about way ahead, you know, way ahead of time. So I hope that answered your question, Brother Glenn. I can't wait till Saturday to go into detail on what is asked. I'm asking if that helps. Oh, okay, definitely. Yeah, bring these questions. I'm always happy for questions. Of course, we always prepare the session. If there are no questions, regardless, we'll have material to talk about. Definitely. But this is a beautiful built machine. Absolutely, absolutely. Yes, yes. Like I say, we don't have to reinvent the wheel, but you can just make things more sustainable, efficient, and scalable. That's all it takes. And that's the reason why Apple is where it's at, Microsoft is where it's at, and also the other top magnificent seven. Google is where they are because not because they invented something, they were the pioneers. Actually, they took ideas from Yahoo and from GoTo.com. We know what happened to Gary. Gary is the one who Bill Gates actually took the idea from and took a copy, a knockoff of their software. It's Gary that was supposed to be the Bill Gates, but he was busy flying instead of being there when he was needed to be there. And same thing with Apple. It was Xerox who came up with the GPU. GUI, I mean, graphic user interface. They're the ones who came up. Xerox did. Now they're more known for printers. But it's Apple that took that idea and ran with it. So you don't have to be the inventor of the underlying technology. You can just make things more efficient, sustainable, and scalable. And there you are. You're the market leader. And that's the whole idea. Brother Theo says here, liquidity is the real lifeblood. Is the lifeblood, my great brother. Why isn't this being shouted from the mountaintops on crypto? No other devs, influence, authority figures, etc. makes mention of this fact. Why? Great question, Brother Thea. Now I understand why. If everybody would be doing it, the 1% wouldn't be controlling the 99%, right? So it's like a well-kept secret that only the 99%, I mean the 1% is using to control the 99% because they're working hard on liquidity, assets, and the 99% is being left with debt, inflation, and fiat currency that is depreciating in purchasing power. So it's knowledge, great brother. It's knowledge. Knowledge is lacking. There is no knowledge. Knowledge is missing. And once we really all get on the same boat and realize how the 1% is operating and how the blueprint is right in front of our eyes, we can do the same thing. Ironically, we've been doing this for over a year now, and it's still, people still don't get it. But it took BlackRock 2 months to really get it done. What we've been talking about for over a year, BlackRock came in, did it in probably a month. 2 months in, and they're already dominating the industry. So it's knowledge. It's just knowledge. Thank you for this amazing session and for continuing to educate, inform, and inspire so we are all better equipped and able to do the same. Absolutely. Well said, great brother Theo. That's the whole purpose. We are all on the same boat. We are not alone. We work as a unit. We work as a community. We're only as strong as the weakest link. We move in unison. We win together. We lose together. And success is all we know, So this is important that we're all on the same page, and we'll keep educating on a daily basis, weekly basis, until we all understand, until we all really get the idea or big picture and better understanding of what we have here is a solution to so many things. And we've been talking about these things for over a year now. That we're seeing things that we've been talking about. So we're just using them as example. Like, you see, this is what we were talking about. This is what we were saying. Remember this, what we were. So it's just like it helps us to really finally show what we're talking about, because it's been just talk. But now finally adults are in the room and they're doing the right thing. They understand finance, they understand liquidity. So we are basically speaking the same language now. So we can point out and be like, okay, this is an example now. This is what we mean. This is exactly what we've been doing or we've been preaching for the last year. And it makes it easier now, hopefully, for those who rely on seeing something to understand it, you know. So it makes it easier for us to really be able to point out and show by example now. This is good, is a good thing for us. It just shows that people are catching up now. Adults are in the room, and our vision that we had a year ago, it's being like people are catching on and applying them now, you know. And unfortunately, it's Wall Street. I would prefer it was a decentralized platform, you know. It would have been Dogecoin or SHIB or all these other community tokens, but no, it's Wall Street. That's the sad part. It took them 2 months to get this figured out, but after 15 years, nobody still cares about this, you know. That's the sad part about it. Queen Beatrice, good evening, family. Hope I find all well. Glad the session is still on. Thank you for the education, inspiration and information. Keep it going, Brother Steve. Thank you so much, Queen Beatrice. It's always a pleasure having you here as well. You are very much appreciated. Always nice having you here as well. Thank you for your leadership. Thank you for your consistency as well. It's a pleasure having you here. My brother Glenn says, great, you answered it all during part 1. Awesome. Beautiful, beautiful. I'm glad we did. So now my mind is blown. How many are now staked in the bulldozer? Yes, there's a lot of things going on here. You know, the staking, the banning, the distributions, and then the boosters also going, and then we have the bulldozer on the platform level also accumulating more BRL, locking them away. Once the engine runs, like we said, we give each other 1 month. 1 month. I mean, one day would be even enough based on the 100 million, but let's say 1 month. Because I'm sure after 1 month we'll hit that threshold and the engine will be really running smoothly, and then we'll really see and understand. Now we won't have to talk. We'll be able to see on the Etherscan and understand how this mechanism is supposed to work. So we'll be able to just highlight, pinpoint, look at Etherscan, and just look at the different metrics. Look at how much we've banned, how much USDC is in the staking platform, how much liquidity improved from last week or from yesterday even, how much liquidity has been added. So this will be, we have really fun times ahead of us that we'll be able to really look at the metrics on a daily, weekly basis and just see the progress, you know. So these are the things we're really looking forward to, where we can really now highlight and point out and look at the progress physically as the liquidity enters the market and the volume kicks in and our engine starts running. So community, I don't want to artificially extend this. All of our tweets are out. All of your comments and feedbacks are addressed. And the beautiful thing about this, and this is how the engine works, is once we get all those USDC distributions, and also part of the bulldozer is to assist these tokens right here. So we'll be able to also use the bulldozer to just buy you a survivor with it, buy killer whale with it, and assist other community tokens with liquidity. That's the whole idea. All tokens in the liquidity in our ecosystem will be extremely liquid thanks to that. So we'll also use those USDC, of course, for survivor and also for killer whale as well, and for any other token that will be part of our ecosystem. So we'll be able to ensure that all our tokens are extremely liquid. And with liquidity, this means that our tokens will also have enough trading volume to sustain themselves. in the long run as well. So that's the beauty of it. That's the whole idea, is that we'll be able to use those USDC distributions to add liquidity to Survivor and to Killer Whale, not just to BRL alone, because BRL will be able to sustain itself just by the trading volume alone and by accumulating liquidity alone. But the other ones will ensure that we feed into them, and we ensure that they also have a very healthy liquidity and a healthy volume to really get them going also as well. And this is how we'll have an ecosystem with deep liquidity tokens, community tokens within our own ecosystem. And this is how we plan on monopolizing the liquidity in a decentralized manner. That's the whole idea, basically. So with that said, community, I want to thank you again for participating in today's day 66. It's been amazing. I really enjoyed these sessions. Time really flies. I don't want to make these sessions extra long. I want to really keep them short and to the point, so that those that will be re-listening will be able to hopefully, take their time and listen through, because there were important topics today, and hopefully the message got across. As always, these sessions are here to inform, educate, and inspire all of us, and to just give us a general idea of what our industry is all about, with the challenges we face, the opportunities that these challenges present, and how we are addressing these challenges and using these opportunities to add value to this industry, because we're all about solutions. We're all about finding ways how to improve our industry, how to better our industry through liquidity fundamentals, through education, through developing our own tokens that are sustainable and liquid and deflationary. And also through, while doing all this, we want to develop and nurture a global decentralized community of like-minded individuals that are willing to use their networks, their skills, their talents, be it content creators, community leaders, influencers, whatever that may be, to better the ecosystem. So we all work together. Every little effort that we put in is for the betterment of the entire community. So with that said, I want to also thank every single one that is putting so much effort, taking that time out of the day, and adding value to the ecosystem in their own way, individual way that they can, with the time they have, consistently. Thank you very much, all of you. With that said, community, I want to thank all of you very, very much. And I want to wish everyone a wonderful rest of their week. And hopefully see you again tomorrow, day 67. We are closing in on 90 days. So this is great. One day at a time, we are bringing awareness to our industry, to our ecosystem. And one day at a time, we're getting more informed, more educated, more inspired. And an inspired and educated and an informed community is a strong community. With that said, community, I want to wish you all a wonderful rest of your week. You and yours find peace and stay healthy. Looking forward to talk to you tomorrow, latest on Saturday during the VC. Bring your feedbacks, bring your questions. Let's make it lively. Let's be proactive, and hopefully you have some questions or feedbacks on Saturday. If not, as usual, we always aim to prepare something for the session. With that said, hopefully see you soon tomorrow or latest on Saturday. Have a wonderful rest of your week, community. Thank you very much for your participation. It was a pleasure having this dialogue with you and this session with you. Bye-bye, everyone. See you soon.